All right, hello, hello, hello. Hope everybody's doing good. I swear every day today, it's been like let everything get crazy right before I start. Um, all right. So, how about them retail sales? That's all I'm gonna say. Pal's got to be like, oh crap. What do we do now? Yeah, I'm sure this is like not what he wanted. Um, but it is kind of I don't know. I don't want to say funny, but it is kind of funny all the same. Yep, that's why I was running just a tad late, trying to get some coffee. Um, talk about like a crazy retail sales. Like this is probably why we haven't heard anything in the last 2 days because Pal's like, what? What's happening? What are we doing? um, yeah, you got to somewhat feel bad for him because he's like, he doesn't say anything. I mean, he just can't win. It doesn't matter what happens. He's gonna, you know, he's gonna be the bad guy in this one. It's just, yeah, sorry, I'm trying to get stuff here. Yeah, not only was this a negative number, but it was also a negative reduction from last time. I think his salary is the same either way. Yes. Yeah, I don't know. I mean, Neuro, I feel like all this does is just make it so like he can sell more books later, right? I'm sure he knew that when he took this job. Um, yeah, I mean, I don't. I mean, he's not unaccustomed to what it does, what it takes, right? I mean, realize too. I mean, he was appointed with Trump, and then obviously, Powell, you know, Biden liked him enough and kept him in play. Um, so yeah, I mean, he understands it. He's not, like I said, I mean, he's not a complete idiot. I would take him a million times over Yellen, but like I said, I think officially, I think the Fed has had too much political influence put over it. And I think that's what the problem has been. Because like Powell and Trump absolutely did not get along. He's like, I'm not going to listen to that guy. I'm going to do this. Like so he was very anti-Trump. But then the problem is in the next, when he's with Biden, even if you like Biden, unfortunately, based off of everything we had to do to get out of a pandemic, it's kind of like you didn't want to, you know, you're getting that political pressure to, hey, listen, buddy, you can't crash the market. We just got rid of the other guy. You can't crash the market on us and turn it back because it'll go right back to the bad guy. So it was a weird situation. I mean, you know, Pal's trying to play both sides of the fence. I feel like he'll be able to sell some books though. Yeah, I feel like he'll be able to sell some books. You know, at the end of the day, that's all he wants to do: sell some books. Retire somewhere, maybe if he's lucky. Right? That's all. There's nothing else there. It's always looking to do, right? Not be labeled the worst guy ever. So, yeah, I mean, he's not the first guy that's going to drive it into a recession. Anyway, that's what we got there. We know we had oil that came in basically about even, so we'll see if that gives us much of a play at 10:30. Currencies besides the Swiss, which is up 71, everything else is basically dead right now, flat. Aussie was retracing; it was doing better earlier. Um, everything's in wait and see, right? Everything's in the wait and see attitude. And like I said, my belief is there's no way he can go above point 0.5 right now. The reason why everybody was justifying it was that the U.S. consumer was spending tons of money. Well, they're not doing as much anymore, right? Um, we'll see. And manufacturing being lower too. Manufacturing not only just being slightly positive, it was actually negative. So it didn't even claw back any of its loss last time, and there was no adjustment. Like they over adjusted for it. So yeah, it's kind of like, wow, what are we gonna do now? So yeah, there's that. I think point 0.5 is there. I think actually the market goes green with point 0.5. I think the market likes a point 0.5. The retail sales number, it should go down. I mean, that's a pretty bad sign. But I think instead of people spending money, I think the threat of the higher interest rate was really the higher looming piece out there. So we'll see. The press conference, it's definitely a popcorn, peanuts, pretzels, whatever you got. Smokes if you got them, right? I think the press conference is going to be interesting. I'm pretty sure he's got to be like, pretty sure he's got to be like, all right, he may drink beforehand. I don't know. I don't know if Pal's a drinking man, but I feel like he'll drink before that one, right? So, yeah, fun and excitement, baby. Fun and excitement. And then we have unemployment tonight. I think that's, I mean, this is one, you guys know I love my nighttime Aussie releases. I got Ernest addicted. This is a good one. I mean, dropping to 3.8, 25,000 new jobs. We've seen, surprise hikes coming out Aussie. This could be good, right? I mean, if we have a nice push after FOMC, right? Then we could have the reversal with Aussie tonight. So pretty excited about that. Excuse me. Pretty excited. That's looking good. And then first thing tomorrow morning, Swiss monetary policy. Not expected to do any change, but do they make any type of policy? It's their a policy assessment. They all got different names for it. Do they use some language that could potentially be strengthening the Swiss soon? Maybe. Who knows? And then tomorrow morning at 7 a.m. again early, the pound is rising. Right, the pound is raising 0.25. Right, and that'll be number 5. And again, 1.25 is a joke because we'll be at 1.0 or 1.5, and we know we're going at least to 2, right? Yeah, we know we'll at least go to 2. And then again, Philly Fed manufacturing. So all kinds of stuff tomorrow. Like in the next 24 hours, chock full of stuff. I mean, everybody's raising rates on everything. So yeah, fun and excitement everywhere. Um, yeah. Hottest news stories. The ECB would act if there was a transmission risk. Yeah. Called Putin reaffirm support of Russian security. Again, not surprised there. Nothing there. The retail sales. Canada housing starts trended lower in May. Canada's housing market is a little different than ours. There's this one here too, talking about the ad hoc meeting, right? Comments in a statement following emergency meeting. Will apply flexibility in reinvesting PEPP redemptions. Instructs committees to prepare new crisis tool. So I love this. Is this bullish or bearish for the euro? So all this time, ECB policy for economy recovery has failed. So it's kind of the same scenario playing out all over the place. But at the same time, I mean, we know that their inflation it's not super, super rampant yet, but it's probably on the way. It was a little bit delayed by the Ukraine. That helped them. That helped put them more into a recession early, so they didn't have to act to the same extent, right? Um, so, well, I don't know. I still think they're going to raise. I think that'll be their first little raise. I think we'll get a little bit of European strength. The dollar's going to go. God forbid our next reading if we breach 9. I mean, I think there could be guys out there with guys and girls, right, with pitchforks. If we go above 9, yeah, we'll see. But yeah, so that's it. There's, like I said, a lot in the next 24 hours. So let's start off. VIX again. News is out. We won't have anything. It'll probably rally up a little bit later today as we get closer to FOMC because that's going to be a big deal. But dollar really kind of holding firm. I mean, it's at minus 0.16. I mean, it opened down here. We're right back at the open. It rallied right up before that news, and then the news came out, and it's like, it's stopping, which leads me to believe that looking at this, and again, cover the Dixie up here. I'm looking at this, going, look, there's the start. There's the initiation of the gap. That's kind of a parabolic move. What did it? Was it news or something related to news? Yeah, kind of. It's like, wait a second, that kind of qualifies for like a parabolic retracement, right? So yeah, could this roll back down into the 104.70? Sure. That's dollar weakness. How the heck do we have dollar weakness on a Fed raise day? Because I think everybody has 7.5 priced in, not 5. But like I said, I feel that Powell is just going with 5. All indices are in the green, 1%. How the heck on a day we're raising interest rates is it up? Because again, 0.75. It's crazy. You see this and you're like, holy crap, this number's horrible. Sell everything. But yet you have this, and again, it makes complete sense why it's there, right? Everybody was expecting 7.5 today, the worst, and we're only going to get 0.5 now, right? God, I guess it's only fair too. I mean, think about it this way. We've been talking about 0.75. The big banks have been talking 0.75. CNBC is like, hey, the market is daring them to do 1.0. With retail sales as bad as it is, I guess somebody has to say it. Could Powell say it's a 0.25 today because the spender, spending habits are already changing and our retail sales has gone down? I mean, I feel like because of CPI we had to mention 0.75, but could you imagine if Powell only did 0.25 today because of retail sales? Because they're seeing, disturbing trends and they're trying for a soft landing. Could you imagine what the indices will do if we get a 0.25? Wow. Wow. Again, popcorns, peanut, pretzels, and smokes if you got them, right? So that's interesting. But let's look into some of these things. And again, natural gas rallying big again today. Gold and silver. Look at silver. I mean, they're up 1%, 1.4%. Again, they're loving the inflation right now. Um, Anyway, here's the Aussie. So you can see really not much. I mean, here's the 8:30 news. It didn't do anything, and it's like, how could you have retail sales be that horribly bad and nothing come in, right? And it wasn't up or down. It was just kind of neutral, right? But we're seeing really from the market close yesterday, 2 o'clock, really, we saw price push back up again. And the question is, where could we potentially see? So this one is out. Um, we'll leave that one there. We know we got something kind of sitting right there, which is kind of what we're bouncing off of. This is a test. Um, Put it somewhere in there. And again, I don't love that level. It's okay. And again, I kind of pushed around right down there. We're seeing 70. Let's put 70 out there because that's a big one. Let's put dot 70. Whoops, not 9. And coordinates. Let's put right there. I'll just change this black. I don't need that. Let's put the text on the top because we're below it. There we go. So we know we got a .7 right there, and again, that may be the level that we're testing off of. We're 80 pips from it right now. I don't know that we can move 80 pips from now till FOMC time. I think it's going to really start getting a little bit slow. I mean, maybe we start getting a little bit, but I really don't know if we can get all the way that high again. So right now, again, we got to see it. The closer we get to FOMC here, but I really feel like, yeah, I really feel like. I mean, to me, it's looking more like a short, right? I mean, it just feels more like a short, right? We've seen price rally up. We got horrible news. There was absolutely no reaction to it. Everybody is so focused on what that number is going to be. Um, you know, and again, if we look at like in a rally, if we take this the high to here, you can see that is there a level of basing from there? Sure. There was a level of basing. There was a rally, a base kind of sideways, and then we kind of went up and based out of it. Could there have been a case made that, hey, listen, this is a time to go long right here? Answer is kind of yeah, right? It's a 23.6 pullback with an extension. We don't quite have enough room to kind of, really come up to this level, right? There's not necessarily a 1 to 3 there, but is that level going to hold an FOMC .5? No. No, it won't, right? I think if anything, I think 7 is the target up top. So let's see. Um, yeah. Yeah, I mean, I think right now our first initial target on this one is going to be 69.50. From where current price is, that's 35 pips, right? You could sneak that in before FOMC. Aussie yen, not doing much, right? Again, we played ping pong with these two levels and kind of tore them up a little bit. And again, this one, top, and then bottom, bottom. So again, bottom here, it based on it, came through, bounced off of it again. It's a little ping pong, came back down, based again, came down and based again. So, I mean, this 93 level right here is obviously, there's something going crazy with this 93 level right there. Right? There's your 93. So 93 is a big deal, right? Um, this is an interesting one right now because, and actually, let's run this from top to bottom. Let's see where we got some levels. Yeah, look, we're right at the 23.6 right now, you know, and it's kind of similar thinking. I don't think there's enough room on this one, but really right there, right? There's your 23.6. But again, is this going to be the new ping pong? Probably, right? Probably. Um, yeah, I mean, probably. I don't think we're really going to get much help from the yen right now, and the Aussies at risk of taking a major loss in this one. Um, again, if we if the Dow surges, the yen could be getting weak too. So again, is there a great trade up in Aussie yen right now? I'd say not really. Right? I mean, there's how much space is this between these two? 36 pips. Right? Not even a 1 to 3. Right? Not even a 1 to 3. So yeah. Not a big fan of that one either, right? No clean setups, right? We're not really near a major level. I do if for some reason we can get up to this level though, I do think that is better for a short. It was kind of pushed, but I do kind of like how strong it pushed out of there. So there may be another opportunity there. It's probably better than the 50%. I would say that this is probably, um, if we can kind of rally up, that could be 93.72 could be an area where we short. It's got to break through here, right? That could be a potential short back down to this 93 level. And again, 70 pips, nice little runner on that one. Euro pound. So we were talking about it coming up before it retraced. Well, it looks like the European market opened literally right here and put its nothing but straight back down again. So we were looking for a bit more of a grind. I was like, yeah, it's looking good. It's looking good. But I did say that again, it was going to be 2 days. I don't know if it would make it 2 days before hitting that level. And it didn't hit it, but obviously today was nothing but straight down for the pound. Um, Now, let me pull fibs up on this one just so you guys can see it. We do have a little bit more room to run before we hit a 50, but I wanted to point this one out because there is a base and a test of this level at the 50. I think you need to watch out for this level, and again, it's in close proximity. It's kind of more right there, I guess. Um, we are within close proximity. We are basing here, but it's not really basing off much. If it comes down again, we could have a kind of a rally back up. I'm not sure why I have that on there. And again, just because it's a 50, but it is a level where we have seen a very strong push, a base in, it came up and then pulled back and used that. Kind of like a Harry Potter, right? A confirmation where it breaks an old zone, then pulls back and uses it. That's kind of what it did. So it did the right move and then kind of accelerated off of it. Those you got to like. So is there a potential reversal here? Yes. That would be at 86.12. Does the euro pound have really much exposure to a dollar interest rate change? A little bit, but not that much. I wouldn't say that this is one of those ones you're like, hey, you have to sit it out here because there's going to be massive amounts of movement. There will be a little bit again, just because how the dollar is used for trade. There'll be a little bit, but the language probably would matter the most. You know, talking about we're seeing the beginnings of a recession, and then Powell going, this is what we wanted, right? That does it because if the U.S. goes into recession, it does have a spillover to the rest of the world. Um, you know, right now it's only the UK. If the U.S. goes into a recession, there's two big boys. Everybody else can pretty much assume that they will also be going that direction. So, yeah, it's coming. Hold on one sec. There we go. All right. So there's a potential opportunity for Euro pound. Euro yen. So Euro yen. Harry Potter is still set up. This one will have some exposure, obviously, with the yen. It's going to bring some yen strength in. So if they do the 0.75, I do believe that this one will skyrocket back to the downside. Again, the alert is still there. We've kind of tagged this level twice, and I love how it's pushed lower. Again, went slightly higher, but I think it's a decent setup pushing back down to the 61.8. Same analysis from yesterday. For those of you that weren't on yesterday, this level is coming in at 139.40. Again, seen a little bit of your weakness today, but I think this one is really going to be shifting over soon into what the yen looks like. Um, so again, think we got some decent opportunity on this one. Um, is it the correct way to play? Is it like the best way to play? Um, I don't want to say the best, but it is a way to play. Yes, later on today, it may be a little bit safer than something, say, than like the dollar yen. Okay, euro dollar. So I'm actually liking this euro dollar. So we talked about it coming down. It didn't make it all the way down to the 103.64, which is kind of like wah wah wah. Yesterday they threw it right back up again, and then the Europeans stepped in. 3 o'clock candle is right there. So that's where the Europeans took this and really sent us nothing but dollar strength. The news we just got is horrible, right? Horrible news. No reaction. So I feel like this one is still trying to drive down. To me, right now, on a purely technical analysis based trading here, this is pulling back in pre news. It looks to me more like it's setting up for dollar weakness and more of a euro strength based trading. We know the euro is not strong today. It's kind of down against everything, right? Down against the pound, down versus the yen, down versus the dollar. So it's not like it's strong, but there looks like there's some potential in this one to be able to trade from it. So, with that said, if we get a little bit more movement, I think that this could also be an option if you're looking to go dollar weak. And my belief is point 0.5 is going to be considered dollar weak. You know, and let me explain that too, since we have a little bit of time today. Tom was in a hurry, so I didn't really get to explain much today, even though we went over. So we had horrible news right today, but it was kind of good for the overall markets. Right now, the cause of inflation is not considered a U.S. problem. Okay, we're not blaming it on anything that we have done. Okay, the way that we handle it is we're trying to cause something in the United States to control it and bring it down. But right now, inflation across the world is basically blamed 100% on, well, not 100%. It's been blamed on COVID, right? And Putin. We're not blaming it on the fact that we left interest rates low way too long and caused this level of inflation because they wanted the economy to be strong and record profits. And now they're like, hey, listen, oil companies, you're making too much money. It's like, yes, it is their business to make money when the price of oil goes high. That's their business. That's how they make money. Okay. You have tried to block Russian oil, lowering supply, jacking the prices. It's your fault, not the oil companies. Okay. Um, Raising the interest rates is the only thing really that matters right now, but it doesn't fix the underlying problem. So that's why this is such a difficult piece. Seeing this weakness come in again, I think that we're probably in it for a long euro dollar. I think if we get the 0.75, though, I do think the market will be surprised. I think they're starting to retreat a little bit. I think it'll like at this point after retail sales. I think Powell is with Powell's thinking he's justified. I think this could be a good opportunity. Now, if we do nothing but from here, again, it is 10 o'clock. If we do nothing but roll back up to the 105, then it looks like the market is is preparing for more of a short. So we're gonna have to see. We got 4 hours to go on it. But with it looking like this, if it doesn't, if this can't rally up that far, if this little kind of sudden rally here stalls, it looks like it's a decent little pop. Okay, looks like we have an opportunity to go long from this 103.65 level. Now pound yen. Pound yen doing a lot of chopping. It hit it again, hit it again, hit it again. So it's not really a level we're looking for. Again, this was a continuation. We were looking for somewhat of a retracement. Um, this one looks like we never really got the entry on this one. So but we're going to remove it because we kind of came and based in it again. Really, I mean, if anything, we could use potentially this one, but unfortunately, there's a test there. So yeah, at this point, I mean, again, we're looking for this to rally down. We never got an entry into this Harry Potter, so you can't really use it. I don't need this anymore. Let's pull this one from. Let's pull a new top to bottom down, just so everybody can get an idea what's happening here. So it looks like it did come up and touch the 23.6, right? There was a little level there, right? There was a drop and a little bit of basing and then a push down again. So there was actually a legitimate trade there. Um, I would be cautious though. The downside of this one, there is a little bit of a base. We know that it was a prior level. We know that we have a touch, and we know we got a front run on it. So it looks like the pound yen could move about another 93 pips lower. Is this going to be the biggest mover out there? Probably not the biggest. Curious to see what the volatility is going to be like on this one. They may jack the volatility on this, unfortunately. Hmm. What you got from the top? 60, 112. Hmm. We're kind of sitting in the middle on this one. I'd say the way that it looks right now, we do have a little bit of a pullback. We do have a level here. We are at 1030. We may see a continued push forward. There's not a whole lot of resistance stopping this one come up again, but I do like this 164.15. It is quite a bit to move though, right? I mean, we're talking about 160 pips from now till kind of FOMC time frame. That's a lot with little to no catalysts. I mean, unless something major happens, but hmm. I think on this one, I think you take a pass on this today and look to see what the response is after. There should be some response. I don't think is the best way to play FOMC today, but I think if we can drive ourselves into this 164.15 or even potentially down to the 160, we're looking to get to one of those two levels before this news. So what we're kind of looking for is we're looking for either up here or we're looking for more of a down here. Again, we know we have a level, but I prefer the 160 level versus the 160, 150. I mean, it is a legitimate level, but um, it's 87 pips. I think we should. If there's any buyers in there, I think we could. If it is going to go down, I think we can push to the downside and break through them with an FOMC that's supportive. Um, yeah, I think we look for those two levels for tomorrow. For Thursday's news. I think that's the way to play that one. Tomorrow morning, look for the rate rise. I think the 0.25 is a disappointment, but I honestly don't think the pound can handle 0.5. Oops, what did I just move? All right. So we talked about this rallying up if it continued to go low. It did not. End of the market hit and it already started to move up. So I was really hoping that that was going to continue. It was well on its way. It was like, man, it should have hit hours before the news. We should have been hitting it right about now. Today, right now would have been like the perfect time to hit. It was set so perfectly, and now we're so not perfect. I'm gonna leave these on though. At this point, they're almost at a stage where it's at a reverse. Yeah, we're not jumping 70 pips in the next 2 hours or next 4 hours. Hmm, just some of the things on this. Where's that? 50. Oh, it's nothing. I removed that. I don't know why that was on there. I was like, why is this number here? It's making absolutely no sense. There we go. Let me see. Is there sellers here for a reason? Yeah, that's why. I don't know if we can get all the way down. I don't know that we can get to either two extremes on this one. Again, dollar comes in with a strong play. Absolutely a bottom. 226 to the downside. We can get there if it's bad news. Um, right now, though, again, it is continuing the trend higher. So I would say this one is showing me that we are lining up more for dollar strength coming in, where the euro dollar is showing me the exact opposite. It's showing me that it's more going to be kind of dollar weakness on there. 34, 21, 30. 218. I have a feeling it's going up, but I have a feeling that we may end up getting like this, right? I think we can. What should I say that is? 120. We may get that. That may be what we're looking for. Again, weak dollar, strong pound. Not the pound super super strong, but it's strong enough. Yeah, hmm. That one's gonna be harder today. I like the euro much much better. Dollar CAD. Well, there's your dollar CAD. We literally bounced right off the profit target. Again, already a zone. We got a newer refined zone. Again, tagged it about 1 o'clock this morning. If you missed that one, the European session was right here. 3 o'clock is right there. In a zone. Didn't hit your 1 to 3, but we expected buyers to step in. 1 to 3 was just past it, but buyers would have been the black line. It tagged those buyers at 7 o'clock this morning, then popped and is rolling back through. Again, looking at dollar CAD. Dollar CAD has come off of a level already, but we know that we are really far and extreme here. Look at this. We are very, very fast. And again, for people looking to, get in, the next area would be the 23.6, and there just happens to be a level right here with a touch at the 23.6, which is another 63 pips away, all the way down here at 120. What is it? 28.67. Right. So it is a target for shorts that are enabled. Okay. But if you did get in this one and you just set it to 1 to 3 and you didn't look at your actual profit targets, remember you got to do both. You typically want to make sure that there's enough room to run, right? You want to make sure there's at least enough room for 1 to 3. But in a situation like this where it's that close, where it's like a 1 to 2.85 or something like that, again, you just set your profit target a little bit shallower, and it did. It went off of it. It got super close. Like it got within. Um, it's ridiculous how close it was. 1.3 pips, right? You go with where the chart shows you the orders are, but it's still driving down. I'd say euro dollar shows weak dollar. Dollar CAD also pretty much showing weak dollar. It is pulling back now, right? But you know, it's very high on the curve. Very high on the curve. So unfortunately, again, if you're in from yesterday. This one's almost out. If you're in the short and it has not closed out before FOMC, I probably would take yourself out ahead of time. Um, Check it out at like 130 if you are short. Just take your profit. You can always get back in after the data comes out, versus dealing with the potential for you know massive amount of movement. Just take your out of the just take yourself out of the position and put yourself back in. Right? Um, don't don't take that risk if you don't need to. Okay. Okay, sorry. Let's look at dollar Swiss. So dollar Swiss is love and parity. You can see 1.0001, right? And 7 and 3. Look, it's like it loves parity. And this is how parity works. It's the most, but it's the most common. 100 or 1 are obviously going to be your biggest ones. Looking at this, I'm looking at the same exact way. We know we have a level sitting right there. We know we've had 2 touches. We just kind of bounced it off level right now. This is also looking, and again, there's a little bit of buyer's type in here, but I would say right now in this one, this is also setting up. It's a third pair that is showing me more dollar weakness right now, right? It's set up high. We know it's high in the curve. We just rallied all the way up. We've had buyers. We've been, failed to go any higher there. It's down 0.12, so it's not a major market mover, but it's showing me dollar weakness is coming. So yeah, I mean, it just falls in line with the euro dollar and dollar CAD. Like I said, not that the pound dollar is not you know, set up in a position, but it's been rallying for a while and it would have to continue moving that direction. These are all reversal type plays. Dollar US, I'm sorry, US yen. Broke through 35. So again, we broke all the way up to 35.50. It's like, yeah, the world's ending. And then it started to push back lower. We're still kind of in the same level. I mean, we're down 77 only because we peaked yesterday. Right here, we peaked, right? That was like the new high. It's like, woo, we broke through the top. And then immediately, everybody tried to buy it, got sucked right back in. We're really kind of, if I extend this across, you'll see it's the equilibrium point, right? Um, I would say use a lot of caution with this today. This not only has the dollar involved, but also has the proxy with the yen in there. Obviously the Dow will move. Um, Retail sales not also not the best for there. So if there was one pair to avoid today, I would say I know some people love this pair. This is going to be a tricky one today. You know, the people that specialize in this one, kind of what the proxies are for this. I think today, again, not only what the number is, but I think the questions. They're going to get some really really pointed questions about you know retail sales numbers, right? It, you know, has inflation peaked? Because he said it peaked last time, but then we accelerated. But now, has retail sales peaked? You know, and if inflation continues to move again, but retail sales continues to get worse, what where does that put us? So I think dollar yen today is going to be very very difficult. I'm wondering if we stay within the same range. How much do we need up top? Yeah, we have to move like 116 pips north and 120 pips south to really break out of this range. I would say that right now this is kind of the range that we are in. Right. That's you know what? Let me change the purple. I use blue for Nadex stuff. That's kind of the range that we're in. Right. Um, Speaking of that, you know what? Let me check it real quick. Pull up Nadex and see kind of where we are placement wise. Dollar yen. Um, no, there's nothing. Yeah, you wouldn't take that. Yeah, absolutely no call spreads in there. Let's see. Do we got any knockouts that are somewhat attractive? Yeah, that one's not horrible. Hmm. It looks like the spreads are already widening. Yep, it looks like the spreads are already widening on this one. Yeah, there's a 10 pip spread on that already. Mm, Dollar yen, 10 pip spread. Gotta love it. Yeah, maybe Netix is gonna go crazy today. Let me see. Come on, hold on. Let me see. Let me check it on binaries and see how insane they are over here. Uh, I mean, I guess it's not. I don't know. I guess it's not horrible. So right now, yeah, never mind. All right, I didn't think it was horrible. It's horrible. So right now, to get short a 7 p.m. 134.20, right? It's a 134.20. It's 25 pips away, right? I guess it's not. I guess 25 is not that much. It's 25 pips away, right? That's the lowest one you can go. It's 58 to get into that one. So it's $42 worth of risk to make 58 on that one. That's to go to the downside. It's moved enough down. There is some cheap stuff up top. Wow. You would need to move up to 135.64, 135.52-ish range. So it would have to go back up to here to find something decent on the top side. You would need a 100 pip mover on that one. Could it do it? Sure, it could. But right now, I don't know. But I will say on this one too, remember it is a proxy, so it is a bit more difficult. But right now, the way that this one is driving, this one is also starting to show us a little bit more dollar strength. So you have the pound dollar, dollar yen, both showing more dollar strength based plays. Where you have on the flip side, you had euro dollar, dollar CAD, and dollar Swiss, and really even the Aussie dollar, all showing the exact opposite. So interesting how that's working out. Let's go ahead and look at oil real quick and see what oil is doing. Like I said, I feel like oil will be overshadowed today. Look at this back and forth. Yeah, oil's not going to be. Oil probably will not trigger anything today. Yeah, look at oil. It's not moving anywhere. It's literally stuck between here and here. Right. Let's go down to 1 minute and see. Yeah, look, it's not even pre-positioning. Right. It kind of did one little hiccup at 10, moved down, and then kind of pulled back, and it's literally sitting between two zones. So yeah, I feel like oil is going to get overshadowed today by FOMC as it normally does. I mean, that's not anything that's not out of the ordinary. So I don't want you guys to think that that's anything special. But yeah, most likely there's not going to be an inventory trade set up today. I mean, whatever. It's not the end of the world. It happens, right? It happens. So yeah, so no 35 and 1 for this. But oil, um, yeah. I mean, it's showing you the chop back and forth. We know we hit buyers at 117. We know we got a bigger level down here. We haven't been able to hit it. With this pulling down, let's see. Hmm, Still think that's going to probably be a short at 120 again. I think this is what we're looking for. I think we look for another push down, breakthrough. Again, there is zones there. Um, Look at that. Oil inventory day, and we're literally chopping. Yeah. So again, oil. Let's see on a 15. Even on a 15, there's really just not enough movement. Even on a 1 minute, it's just stabilized. There's no driving in price. There's no kind of look at this one that there's manipulation. So yeah, not much on that one. Let's check natural gas real quick. We're gonna choose this 30 minute. All right. So natural gas is slowly going back up again. Again, we talked about a base coming in. This is obviously like watching paint dry. It is rallying back up, not super fast. And that just, whatever. It happens. Not much you can do about it. Um, yeah, I still think this one comes back up to 871. Um, FOMC shouldn't really affect this too much, unless there's some major announcement. I don't think it's going to affect it too much. But again, this one's still moving. Now, gold. Gold is bouncing back and forth. We knew we had sellers, and that was our upside target at 1830.19. It did. It came up, and then this is a 730. It hit it, and then at 730 here, did nothing, At 8 did nothing. Really at 8:30 didn't do much, and then once the 9 o'clock window, it started to pull back a little bit. So we're seeing some European profit taking. No matter what they do, I think gold is probably more at a loss today. But I think if this one comes in at point 0.5, I think gold and silver both rally up. I think that will be considered weak for the overall market. And again, inflation will continue. Again, this is hard. Retail sales sucks. That was the backstop of why they could justify going to the higher rate. But at the same time, you know, inflation is the reason why people are spending less. So if they don't curb inflation, people will spend less. But now it's like if we go too much, people are already not spending. It's kind of a lose lose. So yeah, I would say with this driving back down again, it also looks like a weak dollar. And again, if we can pull back to this level right here, this is where's this at? 118.13 for when the FOMC meeting note comes out at 14 right there. Could that potentially be a long? Yeah, I think it. I think it could be right. And we're within striking distance. We could absolutely jump down there in 2 hours or 4 hours. Right? That could be a takeoff point. Is it, do we typically want to break through? No, but it is a confirmed level. And again, all right. Here's a question too. Let me see, how bad is gold? It would have to be a weekly because you couldn't trade the daily. Um, that's not actually that bad. To be honest, that is not actually that horrible. I thought that would be much worse. There's a weekly right there. There's a weekly binary on that one, and it's like 19 bucks risk, right? It fluctuates between like 18 and 19 bucks, right? The one below it, the 145, which is only right here. 145 is right there. That's not that big of a move, particularly if, again, you can see how much this has been whipping back and forth, right? I mean, there's 2.5 days on that one. It's only 25 bucks, so that's not too bad. Um, mm, Gold has a knockout down at 122 bottom. That one's probably actually 121. That one's probably going to get stopped. How horrible is this right now? Okay, so the gold knockouts are actually not super horribly priced, right? They're actually not that bad. I thought they would be a little bit worse by now. This may That may be the way to play it. Excuse me. Yeah, this may actually be how you play FOMC today if you're looking to do it, is over knockouts and gold. Right? You got a couple days to be right, right? If it doesn't, kind of take you out quick. I think it absolutely has the potential to take you out quick today. But we're actually right near some, floors and ceilings right now. So there may actually be something in there. There's one with a 21 floor, and there's one with an 1829 ceiling. That one's a little bit high, so if it pulls back, but again, we're right in the proximity of stopping out two different knockouts, so we'll have something in close proximity. I think that's going to be the way to play it. Again, too early to do it right now. We got 3 hours or 4 hours to go. But I think right now, gold knockouts are looking like the best way to play the FOMC release. So yeah, watch that. Silver, what do we got for silver? Yeah, silver's pushing high, 61.8. It ran into it. There were sellers already there, right? So if we had marked off this right here, that's what we ran into. So decent profit taking point. Do I want to get short silver again? I think point 0.5 spikes this up. I think with the point 0.5, I think we get up to 22. Um, would be my guess, right? Can I put text on there? Yeah. Can I do text? Yeah. Point 0.5. Right? I think that's what point 0.5 does for us. It bumps us higher. 0.75, I think we hold or we start to retreat back to the downside. I do think 0.75 actually would be helpful in starting to really put a damper on inflation. I think that's what we've needed for a while. But the point 0.5, I feel like, yeah, I feel like that they're going to take that as a strength today. So there we go with that. Let's see if oil is starting to do anything. Not really. It's still just, look at this. Here's the 10 o'clock candle. So from, actually, I guess 10 o'clock was here. So it went up a little bit, it went down a little bit. But if you take this as your kind of base level, we really haven't left it, right? We rode it below. It's kind of pushed back in. Look at that. No movement ahead of time. It looks like all the big money is literally sitting there waiting for FOMC. This is crazy. Look at that. Nothing, nothing, nothing. All right, so let's see what we had at the open today. Go to the 15 minute, and again, all going higher. Let's say 9:30 should be here. Yeah, 9:30 was here. Is that a pullback level? It did pull back. It was four candles, so no, I would not have traded it. But with it basing right there and it pulled back down, you could have went long. I think if you knew what you're doing, let's see, one, two, three, that would have been four, so it wouldn't even have been a sell zone. So yeah, I think 3807 is probably where you want. But again, with all these rallying higher, hmm. These are all justified to be up. They all should be up right now. And again, they are up from the open, but they're pulling back. Yeah, I think they're going to pull back down and probably base during lunchtime. And again, not give us a lot of trading opportunity. But um, yeah, I'd say 3807, but we're in such close proximity. They do a point 0.5. I think we can blow through that. Question is, if we get that kind of, yeah, retail sales will suck. We're not going to raise the interest rates. We want to make sure that we are have solid enough numbers. We want to make sure that the economy is strong enough before we raise too high. Um, we probably we probably can come up to here, right? 39.32, right? Pull this off. If it's a point 0.5, 0.75 again, you can set yourself an alert. 37.15. I think we can break through it. Let's look at NQ. I don't know. NQ is looking like it's ready for a short. Hmm. By the way, that did not trigger at 10. Got super, super close, but it did not trigger. So this level's already worked once, right? It gave us a Harry Potter down. It's been front run, and we're pushing a little bit higher, and it's actually been turned away. Um, Not a bad short. Again, playing 10:30. Problem is, I just don't know if we'll have enough movement. How much does it need to move? Oh, 53. It's got a 40 ATR. Middle is 35. Two. Hmm. I don't know if we're gonna have enough time. I feel like this is really gonna flatline from 12 to 2. And then after that, it's obviously more FOMC. We see where we're at. But I'd say right now, I mean, NQ, NQ is looking more like a short. I mean, it's a confirmed level in the past. So um, again, a 0.75. I think a 0.75 sends us directly down from the 11,571. Let's see. I mean, let's see if there's a knockout or anything over there. See if it's cheap. Like I said, the knockouts are kind of holding. What did I say? 573. Well, I mean, there is actually. What did I just do? Did it stop? What just happened? There's a 594 ceiling. I mean, it's close. There's a knockout sitting right there. Now, is that too close? Potentially, but it'll move quick. Next one up top is a 624. That could also be one right there. And again, not horrible, right? If we've driven up a little bit further, I mean, again, it may leave without us. Yeah, I don't know. Two of these are within somewhat close proximity. They're not. It's not horrible. Let me see. Is there a call spread that's like out of the money? I'm afraid this one's going to be jacked up through the roof, though. Let me see. Tech, 415. The call spreads are totally jacked already. There's an out of the money call spread right now. It's out of the money, right? Out of the money by 24 points. So out of the money with $135 worth of risk and max profit of 224. So it's completely out of the money. You would need to burn and go all the way through the other side, and then you're still not taking full advantage of it because it's basically it's a 1 to 2 and it's out of the money. So yeah, stay away from the call spreads. The call spreads are yeah, they are bonkers. Let me see if there's any binaries that even remotely make sense. And the binaries aren't as bad. Um, well, it requires about a 400 point drop. 200 to 300. Yeah. So for NQ, you would need about a 2 to 300 drop down again. We're up 172, so it is positioning on that one. You would need a binary move down to about 11, what, 264? Actually, right here. You would need basically back to the start of this move is kind of where you would need to get one to. And that's actually not bad risk. We're talking about under $20 worth of risk on that one. That's not a bad move to the downside. And again, with the pre-positioning going straight up because of the retail sales numbers, they come in and crank us with a 0.75. That actually would shoot us kind of back down again. So here, let me take this one off and I'll put the other label. Where is it? It's this one. What did I say it was? Let's see. Yeah, it does mark the first one. Okay. Coordinates. What did I say it was? I said there's an a 11,264. 11,264. Right? 11,264. And we're talking about what? 16? Yeah, like 16. Oops, not percentage. Talking about 16, right? Can it do that? Sure. Can it drop 200 points down? Yeah. I mean, this is literally where we were yesterday at the close. So could we eat up the 157 back to the downside? Sure. Sure. I mean, all that does is it's 269 points, right? 269. The daily ATR in this one is 414. So kind of set up, not necessarily a horrible trade there. Okay. Um, again, probably gets a little bit cheaper. Actually, we may be going to jump to the other one. There's a 312 for about $18 worth of risk, right? 1915, 24, 22. Yeah. So there could actually be one there. I mean, kind of see what it moves, but that's actually well within range. So, okay, so it doesn't look bad. So NQ does actually have some knockouts. I'm sorry, some binaries. Stay the heck away from the call spreads. Absolutely nothing in there. You get destroyed. YM, again, YM, we're kind of, again, to me, also up a little bit. Up 1.11. It is the weakest. So if we turn and roll, this one is probably more in a bad spot. Again, a little bit of testing right there. It is 1030. We may get a turn and reverse back to the downside. So we'll see how that kind of turns out. Like I said, I think NQ would be the one to ride better. Actually, YM could be a decent one to the downside. I think we're going to push down to 30,000. Could we evaporate 600 points quickly? Sure, we could in a 0.75, but I really feel like it's going to be a 0.5 for today. Russell, again, Russell also rallying. We know we don't have a 23.6 coming in, so we're not getting assistance from fib traders just for a little bit more, but that is a tested spot. So I would say still on this one, we're still looking for kind of a level up top here to 1762. Is it perfect? Not really. Um, Not great, but I think there's something in this one. Um, like I said, with the 0.75, I think Russell collapses the most. Um, Russell right now is the strongest, so it is a little bit more insulated. But again, raising those interest rates to a 0.75 would be horrible. 0.5, I think this one probably maintains its gains today. I don't think this one is too worse for the weary. Let's see what crude oil is doing. A little bit of a gap, actually. Let's see. Over here. Let's see what crude oil did or is doing. They actually had a little bit bigger expectation. What did they have? A minus 1.2, and it came in positive 7. So a little bit more. They're calling for a minus 2.3. and it came in positive. So yeah, so we got a little bit extra. So that's not bad. That's a 4 million barrel difference. Let's see what this is doing. If anything, nothing. Nothing. Yeah, so that's what I said. I mean, it really didn't qualify for any type of a trade today. Look at that. We have 4 million extra barrels that we didn't think we had, and really no reaction, right? Nothing whatsoever. So yeah, all money is focused on FOMC. Um, yeah, yeah. Honestly, I think right now, kind of some of my favorite ones. Look at this one. It's literally turning around right now. There was that $16 one. That was pretty cheap, right? $16 in NQ down there. It's not bad at all, right? Actually, it's already moving now. Now that same position, that's still at 18. Not horrible. So, but it is starting to move a bit there. It's starting to move. Yeah. So that's it for today, guys. Like I said, I mean, right now you can see everything is acting really, really strange. I mean, we've got 4 million extra barrels. Oil doesn't move at all. Natural gas really kind of retracing, a lot of what it did in the overnight. Let's see what the dollar's doing. If the dollar is picking up any steam at all. Nah, the dollar's still hitting that level. And again, the dollar's peaked high, looking like it wants to fall more. I mean, we're sitting at 105.16. So yeah, I mean, I would say there are more signs out there that are showing us that we're going to have a weak release. I think point 0.5 will be considered by the market as release. I think Powell has, excuse me. I think Powell has all the ammunition he needs to make this a point 0.5 today. I said yesterday that I wouldn't be surprised with it, and that was before I saw the retail sales number. Now that I've seen the retail sales number, even more reason I'm like, yeah, I feel like this is 0.5. So, yeah, so that's where we're at today. So let's go ahead and do the drawing. Let you guys get out of here on time today. Not hold you too much later. Look at that. No Will. No Will today. Wonder what he's doing. Yeah, we're missing Will. Although actually, no Will or no Sean today. So maybe everybody's FOCing it today and taking off. Right. Debbie did win yesterday, so Debbie is in there with the lead. We'll go ahead and we will shut it down for the day. And with that said, let's see who the winner is. It is Debbie. Look at that. 33.33 chance, Debbie. Look at that. 33.33. So let's give it to Debbie. Mark is complete. We'll give Debbie her 100. Right? Debbie gets her 100. Which means, Debbie, tomorrow is you going for 3. Right? Tomorrow it's you going for 3. Right? It'll be number 3 for you. Yeah. So, all right. With that said, that's it for today. Again, be ready. Make sure you guys have limited risk. Do not take a position on without a stop loss. But remember, the reality is a stop loss is not going to protect you from a gap at all. So, wishful thinking, it's always nice when people are like, yeah, I'm just going to, I'm going to use a stop loss. I'm protected. Not true. Stop loss, unfortunately, guys, is not going to protect you from any type of a gap scenario. So, yeah, make sure you use your limited risk today. With that said, I'm out of here. Thank you so much for joining me, and I'll catch you guys tomorrow morning. Take care.